Hello, everybody. I'll tell you what, welcome to the Energy Newsbeat podcast. And to all of the listeners today, we got a special treat. A lot of you may know Jay Young, but Jay Young is the CEO and CEO of King Operating. Jay, welcome to our podcast. We are so glad to have you stop by.
Stuart, I'm glad to be. I'm honored, humbled, everything. I'm just so glad to be here today.
Well, you know, Jay, you and I met a while ago, and you were on my podcast, I believe, in a couple of years ago. And we've kind of grown, and then Ryan Ray got pulled into this little thing as well too. And then you had me on some of your roundtables, and then I've been fortunate enough to get to know you over the King Operating Roundtables, and those are just a hoot. So I've enjoyed getting to know you with your differences of your views. And I mean, Jay, we're going to jump into some of those views. I got tickled the other day about greener. What do you think about greener?
I know we're going greener. I mean, we're going greener in one sense, but we're also, our demand for oil and gas is going up in others. So when you say greener, I'm assuming that you're saying that I coined the term greener.
Right.
Because people just they kept hitting me about this. The media, hey, greener, green. I'm like, dude, we're not going to go green anytime soon. I don't care how many Teslas come in. Hey, they're great cars. They're coming. I know they're coming. I have no problem. Ford, Chevrolet pickups. It's coming. No problem with that. But we're going to get greener before we go the Jetsons or green, 100%. I don't even know if we'll ever 100% go. I mean, 65% of a barrel of oil is used for non-petroleum products for your cars, jets, and trucks.
So to put that in OSU terms, Jay, that would be lipstick. That would be everything in your room looking around the room. I mean, that is just absolutely anything that gets to you, food, fertilizer. I mean, anything that you have as a way of life. Is that a fair statement?
Absolutely. That you're exactly right. There is a lot of different way. I mean, the asphalt on your roads that these Teslas are driving on. I mean, there's so many different things that are made with oil that, yes, I agree. And Tesla cars are great. I went to the Maverick game the other night in one. Good friend of mine has one.
That was the ride.
It was awesome. Great. I mean, big, huge computer screen. I mean, couldn't even hear the car.
Yep.
They're great cars. They really are. I don't know how safe they are compared to a big, huge motor and all that stuff in the front. I don't know that. So my kids aren't going to drive any of those anytime soon, especially when they're this age. But, I do believe it's going to go there, but it's not just anytime soon.
Some of the fun things that you and I've been able to see is all of these interviews that you've been asked to be on, everything from the BBC and Fox, and you just did one with Ameritrade this week. Can you tell me a little bit about that and how that went?
Yeah. So great interview with TD Ameritrade. They're just talking about oil and trying to figure out where is the demand going, where's our supply going, and right now, I mean, you're seeing, public companies. I mean, even Sheffield from Pioneer said, man, I hope oil doesn't go to $100 a barrel because we're not able to take advantage of it because our shareholders don't want us to go out there and drill more wells, and he's afraid that they won't until it's too late. And then when it's too late, costs will go way, way up.
Yep.
And then when costs go way, way up, and then if the price does start coming down to 80, 70 in the future, then they're going to have wells that they drilled at $120 oil that they're going to have to receive 70. I mean, it just doesn't make sense.
But, as we talk about greener, which I get tickled every time I do that, especially when I'm walking down the hall. I told this joke on the round table, and it's like I walk down the hall and my wife goes, "What are you laughing about?" And I'm going, "Because we're going greener." And so I get tickled every time I say it. and
she said, what did she say?
She just kept her head down. She knows that I do stupid jokes all the time, Jay. So she, that poor woman. Hey, so when we sit there and talk about greener, the investors for the public companies don't want them drilling, but they don't mind them acquiring properties that are already working, and they can say that these are now greener properties with free cash flow. doesn't that fit into the King operating plan for 2020, 2022?
Absolutely. Yeah, we've
Yep.
got, we'll have 7 different assets in our fund. We'll have Wyoming, Colorado. We're still working on Wyoming. Have it Wyoming, Colorado. We've got the Mid-Continent. We got the Permian Basin. That's 4. Permian Basin. We got South Texas, Gulf Coast, and East Texas.
Right.
All of these properties, and we're looking to scale 2 or 3 of those this year and divest one of them so the clients get their money back.
Oh, nice.
So that's our goal, and then continue sending you revenue checks after that.
Well,
so yes, that is exactly. People are still buying deals. 2021 was a record year for a lot of A&D companies.
Right.
A&D's coming back.
Yep.
A&D's coming back, and people are buying them. People are
fact,
paying. They're paying premiums.
And paying premiums for your kind of deal. I want to go back to the deal here in a sec, but I want to tease up our roundtable on Tuesday because we're going to cover M&A activities in the Permian and everything else. We've got a lot of new data that this is coming around because of the greener, as I commonly get tickled again on this as well. So you and I are never going to be able to have another podcast again or roundtable without going greener, giggle, like a little
Absolutely.
high school.
I agree. I definitely agree. This is true. This is true.
Oh, it is. And world demand is absolutely. Jay, I'm going to pull a fast one on you here. I got one of your interviews here, and I think that this is absolutely. Some of your quotes are phenomenal, and this one was investing in oil and gas. So, what do people like? Investing in oil and gas companies now only helps them become greener in the future. I'm serious because the more fossil, you said up here earlier, the more fossil fuels we use, the more greener we go, the more fossil fuels we use. Now, isn't that a kind of a goofy thing?
It really is. Yeah. And when prices are up, that's the more we need to drill. Look at Trump. President Trump was drill, baby, drill, drill. And look what happened to oil prices.
Yep.
It went down. We were drilling in Permian Basin and everywhere. And man, we drilled so much that prices started coming down before the pandemic. And you have our supply, which means that's the number of barrels that we produce every day, was going to 14 million barrels a day. Yep. We still need 21 million, 22 million. So we're still at a deficit, but we're producing over 14 million barrels a day.
Right.
Then the pandemic happened, and they went completely off and said, nope, we're not drilling anymore.
Yeah.
Took 75% of the rigs off of the market. So our production started coming down. But yeah, you're right. You've got to have a tremendous amount of rigs running to constantly allow the supply to continue to go up, because wells decline in production.
Yep.
14 million, they'll decline over time. And that's when you got to have new wells and new rigs drilling for oil and gas. So it keeps the production steady going up.
Last year at this time, off of the King Operating website, which is kingoperating.com, there's some good resources there. One of them is the rig count. And Jay, I believe it was 530 rigs are running about now. I have to go check the site and make sure. And last year it was around 300. That's a big jump up, but it's still not where we need to be, is it?
Right. Yeah, it's still not there. And I don't think we'll ever be there, but from what I understand, from what a lot of companies now, I could say that, but then all of a sudden oil prices go to $200 a barrel, and all of a sudden everybody's going to be drilling. Yep. People will find the money. They don't care where, what, how. $200 a barrel, they're going to find the money because of economics. Economics are so good. It costs you $8 million to drill a well, where normally you'd make, 20, 30 million. You're going to be making 50 to 100 million every time you poke a hole in the ground at $200 oil. Yep. You're going to find the money.
Yep.
And you're going to find the rigs, and they'll be drilling like crazy. Then all of a sudden it'll get up here, then it'll start going down again because we'll have to quit drilling because prices come down. So it's all about supply and demand. How much oil are we producing compared to how much do we need? Right. And it's all about supply and demand. And the more supply we have and the less demand, That's what
Yep.
happened during the pandemic is we had a great supply and the pandemic went down. Our demand went way down. We had this oversupply because
Yep.
Saudi Arabia and Russia they already put all these oil on the market
Right.
before the pandemic to lower the price.
Yep.
And then the pandemic happened, so we were oversupplied, so prices went negative.
Well, as we're sitting here and think, you and I have talked about Saudi Arabia and Russia a lot. And, I do a lousy Putin imitation, like, hey, I'm going to hold, Europe, and I'm a lousy Putin imitation, in fact. But
He wasn't Italian. It sounded like you were going Italian on me.
Oh, I can't do Putin. There's no way. I sound more like a Godfather than I do Putin. But
Yeah.
when you sit back and think, Saudi Arabia needs $120 to $135 to balance their budget. Putin has advertised that he is going to be exporting 37% of his GDP as energy. He needs prices of natural gas. They just announced, Jay, from Reuters, that Russia does not have the supply. What does that mean? That means no supply, price goes up.
No supply, exactly. If all these other countries are expecting to get natural gas from Putin or whoever, and they don't have it, they're going to be sitting there needing it from somewhere.
Oh, yeah.
I mean, it's like for the longest time, our demand was 20 million barrels a day. We needed 20 million barrels a day, our appetite for oil. And we were producing 8, 9, 10, 11, 12. And all of a sudden that difference is okay because that was made up by people that Mexico, Canada,
right,
OPEC, but then as that delta gets bigger, that's when you have an incredible amount of, you may have World War III because there's so much money. Yep. You have that big difference in there. And all of a sudden, that's when you go to people that don't like you, that are putting their stuff on the market and saying, hey, no, we're not going to give you any oil unless you pay me $200. And it's like, oh my gosh. And then, but that's the worst thing you can happen.
Hey, I'm going to ask you more specific in our East Texas, near the Haynesville over there. Cheniere is right down in there and they're exporting all of the LNG that they possibly can. They hit an all-time high this week, I believe, in their stock price. And we've had over 30 LNG carriers going to Europe to save their carcass. And as I say in Oklahoma, sometimes carcass. So, I mean, and so, so as you sit back and think with our East Texas property, isn't that part of the fund?
It is part of our fund. And that's going to be some good oil and gas that we're going to be drilling. So for let everybody know, one part of our fund, King Operating Partners 1LP, our first fund, Fund 1, is we do have an asset in East Texas and we're going to drill that. We're drilling that in the next few months. And as soon as we do, we'll put that on the market and we'll have the production, but we'll also put that up for sale. It could be worth $50 to $100 million or more just based on what the prices are at that time. So we're very excited about that. That's one of my projects that I want to put on and sell by the end of this year, because I won't say if we do or when we do. We're gonna give all the clients their money back, and then Fund 2 will be funded and we'll be off to the races on some other great projects. That
just fits into what we just talked about, Jay, and what we're going to talk about next Tuesday in the M&A. All of a sudden, that becomes prime real estate. It's all about location, isn't it?
Right. Exactly. It is. And that's what you want to do, is you want to find the best locations. Our job is to bring in projects that we can drill up, improve the value, and then divest. Mm-hmm. And we want to do that. We want to do that, especially in our funds in the beginning, because it gives all the clients their money back. And then they love us. Yep. They have no money out of their pocket. They're still getting 20% returns. Well, the internal rate of return on that has got to be phenomenal. You're getting 20% of return on a balance you already have back. Well, that's crazy. So we want to do Fund 2, Fund 3. We want to build a $2 billion, $5 billion, $10 billion company with the other assets in there. Right. So in 3 to 5 years, after doing 3 to 5 different partnerships, we can have that, and we can either go public, or we can,
Right.
whatever the case may be at that time. I don't know what's going to happen. Yet nobody does, but we want to give it the opportunity, or have the opportunity. We may just sell the whole thing to somebody, but it's good projects in good areas, and the better rock, the better.
When you sit back and think about this, I've never seen such a perfect storm, Jay. You and I have talked about, and my hairline just gets messed up in a storm. So I could walk through this storm. And if I'm walking through the storm, commodities are huge sharing of wealth. And so that's a big deal when you start going through and saying, what do I invest in? What do I protect my portfolio in? And oh, by the way, I need tax breaks.
Yeah. Oh, absolutely. I'm exactly 100% encouraged with this. And, the biggest thing that we did this year was to increase our value, was to look at our different assets. And hey, you know what? When we did one asset, Scurry County Energy Fund, we made a mistake. And the mistake that we made was by going all in on one asset. Because if you go all in on one asset, what happens is that asset doesn't sell at the right time, at the right place, at the right, everything's not lined up. Well, then, hey, you know what? Your investors are pretty much toast. So why don't we do this? Why don't we buy 7 deals in 7 different spots? We have teams built around each one, and then you never know what's going to sell. You can't, there's no guarantees in this business. So if we can increase the value in 2 out of 3 of them this year, sell one, get your money back, and then continue sending you monthly revenue checks, you're going to be pretty happy.
I'd be real happy. Well, Jay, I'm going to put the contact information in here below the article and everything else. But I'll tell you, I am so excited about getting to see you on the roundtable again on Tuesday. And I'm going to throw it over to you for the last word. What is the Jay Young positive thought for the day?
Yeah, great thought. It's the right time to be involved in oil and gas.
Yep.
There is not a better time. There's not a better company than ours because of the way we structure our deals for you. This is, all right, we're thankful for our employees, the people that we have on board. We are thankful for you as the investors. And most importantly, you can have all this, but if you have the wrong structure on a project, you're not going to do very well. So we have restructured the program. We're going to add another project in Wyoming, world class. I mean, it is a world class project. I'm really excited about it, but we're going to do that as well. And so this is all for the investors in Fund One. So, call your representative, come in, let's get a deal done. And
sounds great.
I'm going to be the one that's going to look at this every day, and I'm going to look at it. You need to sit back and get your tax benefits, see your monthly revenue checks go up. And number 3, we're going to scale this thing to where you're going to be very, very happy. And come to the rig. Come to the rig with us.
Oh, absolutely. When is that trip?
Well, we've got several. We can do it anytime you want.
Okay.
When do you want to do it?
Look at the time. We got to go. We got to go now.
Yeah, I think we're spudding next week. We're spudding next week. Today is the 14th, January 14th. Right. We look to spud that well on January 17th, 18th.
Okay.
If everything goes right, we're still moving things in over the weekend. And then we're going to spud the next well. This is in the panhandle of Texas, about an hour and a half north of Amarillo.
Oh, nice.
And then we're going to drill wells in East Texas and Wyoming and also Colorado this year. So, hey, wherever you happen to be at whatever time you have some time, let's go.
I had an investor contact me, Jay, real quick. And they said they thought it was an understanding that you were 100-year-old man that was in the oil business, or is that a 100-year-old family? Your family has been in there, or are you really 100 years old?
I am. I look good. I look good for 125, don't I?
But your family's been in it for
my 59th birthday. I'm a 4th generation. My great grandfather was in the oil business. I've got pictures of him. You can see on the website. And my great grandfather's in the business. He had 12 kids, and they were all in the oil business. If you're a man, you're in the oil business, and if you're a woman, you're married to somebody in the oil business. And but that was over 100 years ago that they were.
Wow.
Yeah. I mean, that's all we talk about is oil and gas. I mean, I don't know what you talked about at your round table. Well, of course, your dad was military.
Yep.
I'm sure you talked about military stuff at Christmas and dinner.
Yep. We talked about how many push-ups you could do. So, all right.
Yeah, we talked about the oil business and how much love it was. And so that's how I grew up. I love this business. There is not a better time. I'm looking to get as many wells drilled this year as possible because that fund that we have, which is 25 going to 35 million, we'll have that. We hope to have that fund up to $150 million value by the end of this year.
Nice. Well, well done,
goal,
Jay.
150 million.
That's a lot of money going back to the investors. All right.
If we sell a piece of it, see what happens is if you don't sell it, you don't realize the profits because this is alternative investments.
Right.
That's why I'm saying that, hey, you got to sell some of it to give the clients their money back.
We
if
like
I can
that.
get you your money back and send you revenue or continue scaling the investment, that's what you're excited about. But if you don't have your money back, it could be worth $3 billion.
Right.
3 trillion. I don't know. But I mean, you're like, hey, I got to find this where I got a buddy of mine too. I got a buddy of mine in one of my groups, and he invested in this deal, and he goes, oh man, my money's worth $200 million. I mean, it's just oh my gosh. We put $1 million in this thing that's worth $200 million. I go, oh man, that's awesome. Hey, great. Do you have a check? No, I don't have a check. We're gonna get a check. So I saw him 2-3 months later, and I'm like, hey man, how'd that go? He goes, oh man, don't ask me. Don't ask. He said, we're trying to get callbacks from these people. We don't know what's going on. And
wow.
It's just not looking good. But I mean, he was excited because he thought, man, I got $1 million in something that's gonna be worth $2 million. And I'm just saying, hey, we got to sell something for you to realize profits. We got to get you all your money back. Because if I get you your money back, you get $1 million.
You're happy.
Later on down the road, hey, we're still scaling it, and we go public. We were careful with the debt that we're using. See, I'm gonna knock out all the debt, get the clients all their money back, and then I'll use the debt, which will be bank debt, to go in and drill some more wells in Wyoming or Basin, just some little bitty, so we're not overextending ourselves because I want the cash flow.
Right.
I've got 12 and a half units in this project. I don't want my wife wants her money back too.
Believe me, my wife rules the roost. Well, Jay, thank you for your time and your leadership. I really appreciate you. And I cannot wait till our roundtable on Tuesday to talk about some serious M&A activity.
Hey man, it's going to be great. What are we going to talk about? It's going to be awesome. You need to come. Sure. I appreciate all your stuff you do. Man, you're awesome. I mean, we've been around Midland, traveled. We're going to Amarillo. I mean, you're a great guy. And I appreciate all that you do for us. And man, it's just awesome. Really, really thankful for you.
Sounds great. Thank you, Jay.
All right, you're welcome. And I think our roundtable on Tuesday is going to be awesome. Whatever you come up with, whatever you decide on, man, we're going to do it. We're going to knock it out of the park.
Sounds great, Jay. Hey, talk to you soon. I know my guys are going to love this. Thanks.
Good. Thanks.